Good morning, everybody. Hey, I hope you all had a great Labor Day weekend as we head into this short week, the first week of September. The markets right now are trending lower. We'll see if that can reverse before the market opens up here in just a few minutes. But remember that in the world we live in, there are so many things that are out of our control. I want you to know that you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio and making sure that that risk truly lines up with where it should be based on your age, how close you are to retirement, and other characteristics of you. That's why I developed the core retirement design. Give me a call at 863 382 0037 to schedule your core retirement analysis. Hey, with that, we got Dave coming up next.
Ever Manley, George, Michael, and Lamb there. We're at 8:41 now, 19 here before 9. It's time to check in and find out what's actually going on with your money. Markets were closed yesterday. We ended up August doing pretty well. Let's see what might affect you this week, and we got a whole pile of stuff starting on tomorrow. On the phone with me is Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, I trust you had a pleasant Labor Day.
Hey, we did. It was nice to have a little break, but short week this week, and it's the first week of September. It's hard to say that.
Absolutely. First day of September. Closed yesterday. Friday was a really nice up day. As a matter of fact, that little tail I always look for at the end of a day before a long weekend, it wasn't there. Nobody took a lot of money off the table. Dow was up by 228, another really nice new record high. Standard & Poor's was up by 56.5. NASDAQ was up 197 points. And like I said, there wasn't any money taken off the table either, which really kind of surprised me at the end of the day. Turned into a pretty doggone good August, didn't it?
Yeah, it really did, Dave. You know, if you look at today, we may be giving back some of those gains, and you know, we look at the markets and we talk about the futures every morning. I mean, that's what we're looking at is what are the futures going to do, and so the futures are a little different than the actual index itself, right? We're talking about a future indexes
Hello?
down the road. Are you there?
Yeah, I lost you for
Okay.
about a second and a half
Yeah,
there.
our internet goes in and out here lately. I'm at the house, so so here's the deal. On a future standpoint, it was a pretty good month of August. Now, not as you know, obviously the indexes weren't quite as good as this number I'm going to tell you, but the S&P 500 futures, the S&P 500 futures were up a little over 6% last month. The
Ooh.
Dow Jones Industrial 30 futures, not the index, but the futures itself, were up almost 4.7%. And the NASDAQ 100 futures were up almost 7.2%. And the Russell 2000 futures for the month of August were up about 6.3%. Now, again, that's not how well the indexes did. That's how well the futures did, which is what you and I talk about pretty much in the morning when we leave the air. We talk about what the futures are. That doesn't necessarily mean that's what the market's going to open at, right? And so there's a difference
Absolutely.
between the future and the actual index.
Absolutely. Yeah. To flesh it out, futures are used in two different levels. Number one, day by day, when we talk about the movement, gives us an indication day by day which direction they're likely to do when they open up. On the long term, though, what we're doing, talking about future, we're talking basically what investors are expecting far as October, because they're buying about a month in advance on the futures. And those kind of indicate a bet of one sort or another on a pretty positive month ahead of us, which we kind of fly in the face of tradition because September is not generally a very good month on Wall Street, is it?
No, it's usually not. I mean, you look at August, September. I mean, it's kind of the, I won't say the doldrums of summer because, well, September is really heading into fall, right? But it is. I mean, it's at that time where things slow down from an economic standpoint. The markets slow down. And so it's one of those things that we'll look. I mean, like this morning, the futures are off to a bright red start. And so the question is, what do we look like at the end of the month? Because that's what's important.
Absolutely. Will it continue? I know annually, on a regular basis, the average for September over the last, about 20 years, the Standard & Poor's 500 lost an average of 2.3% of its value during the month of September. So seeing a positive futures indication at least tends to give us an idea. You mentioned that things are a bright shade of red. And I'd mentioned at the outset that normally there's a tendency at the end of a week before a 3-day weekend to take money off the table. I'm kind of getting the feeling that a lot of the brokers and a lot of the fund managers looked at August and said, okay, we're going to have a pretty good run. We'll make our trades to adjust for the month on the futures market before the first trading day of the month, because we were up at the end of the day on Friday. And then all of a sudden seeing a bit of a sell-off this morning without really any economic indications that would give them a reason to do so. So I'm kind of wondering whether or not we're just kind of cooking the books a little bit at a few monthly reports coming out of brokerage funds and saying, we'll just do it on the 1st of September and take our lumps then.
Well, it's either that or maybe we're taking some money off the table because we had a good August. And there's no economic reason. There's nothing out there in the world making us look that way. So it's just, time to make some changes in portfolios. And sometimes that drags the market down a little bit.
Absolutely. It's going to kind of a high stakes week for us this week. You mentioned first week of the month and the first trading day of the month today. This week is going to be rather busy with the JOLTS report with job openings coming out tomorrow. ADP is going to run a little late, according to my calendar anyway. We're going to get the private sector employment out on Thursday, and then on Friday, we get the proverbial national unemployment rate. And I've got to figure that the federal government number is going to be pretty high stakes on the market, because July was such a disappointment with only 114,000 jobs reported in July. During the first week in August. The biggest concern that they've got right now is, has the Fed held on to the high interest rates and choked down the employment market too much? And we'll find that out a little bit coming up on Friday with the official non-farm payroll number. And if it disappoints, I got a sneaking hunch we're going to have a rather vociferous reaction out of Wall Street.
Well, we could. We very well could. I mean, we got construction spending comes out actually today at 10. So that'll be a subject for tomorrow. But you're right. So I'm looking at what the analysts are calling for when it comes to Friday's job numbers, and they're expecting a pretty significant increase from that 114. The expectation is for us to get about 162,000, and for unemployment rate to actually drop 0.1%. So it'll be interesting to see how close the analysts are to that prediction.
Absolutely. It was interesting. We kind of overshot the Federal Reserve's goal of 4% unemployment by ticking up to 4.3 last month. And like I said, that 114,000 jobs, that was about as bad as you can expect to get as far as a fully functioning economy. So if we miss by a wide margin on Friday, I suspect it's going to be interesting, and we'll get some jitters already. Like I said, with the JOLTS report tomorrow and then the ADP report on Thursday, there's going to be plenty to be able to tickle investors and either make them feel more confident or less so.
Well, that's right. I mean, we've got a lot of news coming in, and then the next week, of course, we got even more economic news coming in. So not a shortage of news these first couple of weeks, but before we head into the last couple of weeks of the quarter, and see how we can salvage the quarter or make it a great quarter.
Salvage or make it great. Those are the two choices we got as much as anything. When we get to the Federal Reserve meeting later on this month, it's almost a slam dunk. There's going to be at least a 25 basis point reduction in the reference interest rate. As of Friday afternoon, markets were pricing in about a 31% chance that the Fed could go down a full half point on the interest rate. That would make things intriguing, and a lot of that indication and those odds will change as the reports come out this week so far. Other tidbits out there overseas, political unrest going on over in Europe. A bunch of fringe parties have been winning local elections in Germany. That's messing with their futures this morning. The Asian Rim is still in a state of upset. South Korea is relatively healthy, but the housing crisis in China with that great big surplus of unoccupied, unfinished buildings, whole cities that are empty of people, but everybody was buying them up a few years ago. That continues. So Asian markets are near a 7-month low at the moment on the mainland Chinese market. That's going to drag us down eventually, just on the grounds that it makes our high-tech firms a little bit more iffy as far as whether or not they can sell anything over there.
Well, that's true. And we've got some other things. I saw an article that gives some indication of people pulling back a little bit on their spending. And that would be that so far this year, we've seen 10 restaurant chains file for bankruptcy, including probably one of the biggest ones, the Red Lobster chain. So a pretty big deal there.
Discretionary spending is a little bit difficult. Maybe McDonald's had a pretty good quarter, as I remember correctly, but the quote unquote carriage trade crowd, where you run a $60, $70, $80 bill up for dinner for two, that's getting harder to be able to pry loose from people, isn't it?
It really is, Dave. It's definitely having an effect on the restaurant industry for sure.
So a lot of indications coming this week. Resetting the table. It was a green day on Wall Street to close out August, 45 minutes before we opened this morning. What's September looking like?
Well, we still got some red ink today, Dave. The Dow's down 0.5%. The S&P 500 is down about 0.5%, as well as the NASDAQ 100 down a little over 0.5%. Russell 2000 is taking it on the chin this morning, down 1.1%. So on the other side of the coin, everything's pretty much red there as well. We've got silver down 1.25. Gold is down fractionally, like less than 50 cents, but still down. And the crude oil down 1.5% to $72.50 a barrel.
That's cool. I filled up with gas yesterday. I'm so used to high gas prices, I accidentally pressed the mid-grade pump switch. Still filled up at $3.50 a gallon. Realized halfway through the fill-up, I was saying, wait a minute, I'm paying 45 cents more than I should have to, but I'm almost used to 3.5. It's called calluses. What can you say? Overseas market, the Asian Rim closed for the most part off over the weekend. It kind of surprised me because the South Korean inflation report should look good, but they were off by 0.5%. Asian Rim off by about 0.5% overall across the board this morning. European markets are looking at the unrest they've got there on the political front, and they're saying, ruh-roh, we're overall down by about 1/3% halfway through the European trading day, and our futures aren't helping them a bit. I'm watching them update even downward even as I speak. Getting a retirement plan together is something that does not involve looking at day-to-day index futures and how they're doing. That takes a long-term plan. How do I get a hold of you to get a plan so I might be able to retire someday?
Dave, you can give us a call at 863-382-0037 to walk through our core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me back again tomorrow morning talking about employment in all probability. You have a good day, my friend, and I'll see you then.
All right, take care.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Thanks again. I want to thank you for joining us today. Hope your week gets off to a great start. Join us again tomorrow, same time, same place. Until then, have a great day. Bye now.